bank, and he took me to the Alberta Treasury branch. And I went in, he co-signed my first loan, and basically after that came a house. Now where do I go? I go to the Alberta Treasury branch. Why? Because my dad told me to go. So we basically follow a pattern, we follow a routine, we follow what everybody basically does. When you want money, a loan, anything like that, you're basically at a bank. It wasn't until probably about 5 years ago, 2 years before I actually became a mortgage broker, I found out that there was actually mortgage brokers out there. So basically what a mortgage broker is and what we do is we take an application from you, and I deal with over 100 different lenders that have different criteria, different rules, and different regulations to get you financed. So the best thing that I can express, like with a bank, is every bank, they have a specialty, and it's almost like a Cinderella slipper. Your foot completely has to fit into that slipper, and if it doesn't, you're denied. That does not mean that you cannot qualify somewhere else for even a better rate than what you could have got at your own institution. So what a mortgage broker does is works based on your information, your criteria, because everybody's different, to get you the best rate, the best mortgage, because it's not just necessarily all about the rate. So that's kind of basically what a mortgage broker is. I'm also an insurance broker, so I deal there with life, accident, sickness, group benefits, retirement planning, financial planning, segregated funds, RRSPs, and all that kind of good stuff. So that's a completely different seminar. I'm not really going to get too much into that, but if it's definitely something you guys are maybe interested in learning more about, let me know. Your credit cards are insured. It's a debt creditor insurance. Your car is insured. Your mortgage is insured. Not too many people actually insure their life, right? And if something happens to you, you've got little ones, loved ones, you should be insured and protected. So basically what I've done is, because there's so many different products, rules, regulations from the lenders, I'm going to more focus on CMHC and what they require for a mortgage. So in the pamphlets that I broke out to you, there's CMHC guidelines for newcomers. And it is a great program. All the regulations, I'll kind of go through all that with you guys later, but you have to be within Canada for a minimum of 3 years. If you're here over that, you're qualifying as a Canadian just for, like the rest of us. You don't qualify for that new immigration kind of status. So we're just going to kind of go through the realm here. And this is my wrong presentation, I think. Yeah. Hold on. Okay, so the first thing that we should be all kind of aware of, and I've talked to you, you're very financial literate. A lot of people are. So basically financial literacy is just kind of knowing about finances, learning about real estate, insurance, investing, savings, tax planning, retirement. It also involves intimate knowledge of financial concepts like compound interest, financial planning, mechanics of a credit card, advantages, saving methods, consumer rights, time, value, and money. So what I've found, for instance, for myself, dealing with a lot of new immigrants here in Canada, is every store you go into, Home Depot, Walmart, everybody's asking you, do you want a credit card? Do you want a credit card? Do you want a credit card? And they're like, hey, they have like about 10 cards. I'm like, well, there's so many credit cards. Well, we thought it was normal when we come to Canada to do that. The maximum credit cards that a person wants is two credit cards. You want roughly about limits of around 5,000. If they offer you a credit card at 500 to start, take it. It will increase over time. Try not to get over that $5,000 mark, unless of course you can, fend for it, right? I'll get into the whole credit card debt after, but that, for the financial standpoint, is 2. And the reason why is we want to compare apples to oranges. We want to see how you're paying your debt, if you're paying your debt, And we want two trade lines basically on your credit. So 2 credit cards max. This is just a study here. Canadian household debt is at an all-time high of 163% debt to income ratio, meaning for every dollar that you make, you owe $1.63. And this is staggering. Like, this is just very unfortunate, especially now with the economy being the way that it is. The industry is going down, people are losing their jobs. So not only do you have massive debt, but you can't get out of debt. It's very important that when you're talking about finances to basically start setting goals. They're very important, because without a goal, you're just wasting your time, right? You're just going to work and you're paying, you go to work and you pay, you're never going to achieve anything. Now with goals, achievable and realistic, okay? So an achievable goal, just make it real, right? Baby steps. So like, say you want a new pair of shoes. I'm all about the shoes, right? You know, save the money for the shoes. If it means food over a pair of shoes, it's not a realistic expectation, okay? The other thing is that people, we're one of our own worst critics, okay? So even when you are setting goals, you have to be really realistic. Because when you fail, you're going to start beating yourself up at it, and then you're going to like, this is terrible, I'm not doing this no more, because it doesn't make you feel good. So if you actually set a goal and baby step it, and you start seeing these accomplishments, it's like, hey, you know what, I can do this, right? And it starts out with a $50 pair of shoes, then it's up to a $100 purse, then it's, you know, you're buying a new car, you know, your payment's $100 bi-weekly or something. Achievable. Sets yourself up for success, definitely not failure, okay? And of course, need versus wants. Do I believe that I can achieve this goal? Am I willing to do the things needed? And am I able to do what is needed? Are you able to walk past the Burger King and not stop in and go home and make yourself a salad? You know, your Burger King, it's $12, $15. And you think you're eating cheap because it's Burger King, but in all fairness, you could be at Moxie's eating $15 too. The whole thing is, set yourself up. 1 meal here, 2 meal here, eat at home. Invite friends over to your house on a Friday and say, hey, you know what, like, I'm having dinner at home tonight. It's way cheaper. You could feed 6 people for probably about $30 to $50 versus going out for a meal, paying for parking, entertainment. After you're done eating, you don't want to go home. But believe it or not, you're actually going to save. And everybody's there together. So a need. And this is, I think, where everybody kind of, we live in a society where we don't really know what needs and wants are. Because we want everything, and we think we need it, right? So a need is something that secures a roof over your head, enough food and water to maintain our health, basic health care, hygiene, and of course clothing. Those are things that we need. A want is everything else you buy regardless of how you try to justify it, okay? It's human nature is such that many of us find ways to justify wants as needs in order to legitimize the purchase. And that, of course, too, I find with plastic now, because everything is plastic, you don't even know what you're spending. Because you're at Tim Hortons, you're buying a coffee for $1.80, and then you go here and you swipe, and you swipe, and you swipe. But everything that you're swiping is probably under 10 or 20 bucks. But at the end of the day, because that's all you hear is 10, 20 bucks. If you actually look at your card history, it's like, I spent 100 or 200 bucks. Right? You have no clue. I honestly believe that when you're trying to set goals and realizing about finances, and you get yourself on that budget, and say you budget $100 a week for spending or extras, have it cash in your wallet. If you need to give yourself a budget of $20 a day, whatever you don't spend that day, add it to the next pile. Now you got $40, right? Keep adding it. You want to go out Friday night and you need $100, well, guess what? Monday, Tuesday, Wednesday, Thursday, you're not doing nothing. But have that goal, touch it, see it, feel it. A debit card, you know, like my kids, they just think you just keep swiping and it never ends, right? But it's so true. So really, really watch all of that. So there's 5 stages of budgeting. I've added actually a budget sheet into your thing there. What I want you guys to do is honestly start keeping receipts for 30 days. You want to see how you're spending 30 days. Keep every receipt that you bought. Calculate it or write it down daily if you don't want to have a big bag of receipts. But calculate. Within 7 days, I guarantee you, you're going to see a pattern and you're going to see a history. And it's like, my goodness, like this $1.80 coffee, by the end of the week, I spent 20 bucks at Tim Hortons. Like, really? Would I really need all that cream and sugar? Right? You know what I mean? But you'll really start seeing where you're spending and how you're spending and how you can change, right? So track those expenses. 2, of course, choose your categories. Everybody's category is going to be different. You might have a card payment, you might not. You might have a budget for clothing, he definitely doesn't, right? Do you know what I mean? So really kind of pick your category. Cable bills, cell phones, you know, maybe your utilities are worked into your rent payment or your mortgage payment, who knows? Weigh your options. So really analyze it all. Look at it all. Do I really need to be spending all of this money in these categories? Like when you have your receipts, like, do I really need all of this? Of course, take the action. Now that you see it, now you can change it, right? And you'll see, right, it'll be right there, plain in front of you, what needs to be changed. And of course, evaluate and adjust it. So shock, of course, you're going to be in complete shock when you actually start seeing where your money is. I did a budget for a family and I took 3 months of his bank statements, and he was too cheap to pay for the $10, $12 of the unlimited banking. So he was actually paying $1.50 to $4 every time he used his card. Within that 3-month time, he spent over $200 in banking fees. That's a lot of money, right? Like, you already are paying to have an account there. You shouldn't have to be paying to access your money. And once he's seen that, right, from the $100 to $200 to $30 if he would have paid for the unlimited, it's cheaper.
How much is it unlimited?
Well, for me at RBC, I'm paying $12 a month for unlimited, and I can swipe my card anywhere. The only time that I get charged is if I go to a bank machine to pull out cash. Okay, but other than that, I can swipe it at Walmart, Canadian Tire, whatever. And my husband, I am a financial expert, and he refuses to pay the bank $10. So he uses his credit card, right? Because he won't use his debit card. Well, do you pay your credit card balance off every month? No. So his $1.80 tap at Tim Hortons, thinking he's saving $1, probably turned into about $5 in interest at 20%. Do you see what I mean? It's little stuff like this that you kind of have to analyze and think and say, hey, right? That all has to change. So once you start past the shock point of how you're spending your money, reduce your expenses without changing your lifestyle. Like I said to you guys, Friday night, I'm not telling you guys to stop going out to eat dinner with your friends. I'm telling you to bring your friends home. You know, buy a bottle of wine or whatever it is that you guys want to do. Just bring it home. It's cheaper. Maybe you all could put in $10 and then make a big feast at yourself, all you guys together, right? It's like a potluck. You're making a salad, you're making the meat, you're making the vegetable, etc. But it's a fun social time. It's bringing everybody together. And believe it or not, in the kitchen, when you're chopping and cooking and everybody, it's fun. Make it fun. Put your jazz music on, whatever you guys want to listen to in the background. It's actually going to be more enjoyable, and you're not rushed out the door. Here's your bill. It's time to go, right? You guys choose. So don't change your lifestyle drastic, because you will fail, right? As soon as everything starts changing and you're depressed and you're sad, you're like, this is awful, forget it, and your old habits pick up again. Of course, you have to involve the family to work towards common goals. Set that goal, like even for the little ones here. I know when I take my kids to the store, especially my daughter, it's like 10 of these, 5 of these, 6 of those, you know what I mean? It's like, I don't even want to bring her in the store, because it's like, I want. So maybe have a reward jar or something for the kids and say, hey, you know what, remember that reward jar? Do we really need this? Start teaching them. And the best that you could do with these little ones at the younger age is how they're going to start living when they're teenagers, how they're going to be successful when they actually leave home. Where a lot of people, especially here in Canada, have gone wrong is, like I know from my parents, both of them came from rough families, they didn't have much. So now that my parents were somewhat successful in the oil industry, making good money, they really spoiled my brother and I. And when we went out into the real world, like, my goodness, was I shocked, right? Like, what do you mean? You know? But like, it was tough. It was hard. Like, you know, you have to really put everything into line. Credit cards, cars, car loans, anytime that you've actually applied for money, every time they're gonna have your name, your address, etc. So all of that personal information is gonna be on there. I'm gonna see where you've lived since you've been here to Canada, right? Since you've turned 18 of age. It's gonna also give me a list of inquiries. So it's gonna say Walmart pulled your credit, CIBC pulled your credit, whoever you went to for credit, it's gonna give me a list, and it's also gonna have the dates of when that was established. It's also gonna have your employment information, so of course employment history. So you could be a student, maybe the last time you applied for a student credit card, now you're an engineer. It's gonna state all of that on there. It's also gonna have remarks. So say you got a credit card, you weren't paying it, it was closed at a credit grantor's request, or say you closed your account, or just, it'll have information and tidbits about it. All of these items are public record, okay? So let's say that you had a Walmart card, you never paid it, and it went to collections, okay? So you moved, you changed your number, woohoo, collection guy's not calling no more, right? 2 years later, you go and apply for something different. Well, you forgot about the Walmart card, right? They're automatically notified with all of your new information and given all of your new information. So guaranteed within 24 hours, you're gonna get Walmart calling and saying, hey, where's my money, okay? So it is public record, and the whole reason why it's public record is that so we can see, like as a mortgage broker, I can see what kind of credit you've had, what kind of credit you've applied for, how you've paid your bills, if you're on time, et cetera, et cetera, et cetera. I'm looking for a history. You might seem like a really nice person coming to me, and I'd really like to give you $300,000 just because you're nice. No, it doesn't work like that. Prove to me that you can pay your bills on time, right? And credit management history. They've added now what is called the Bank Nav Index score. So not only are you getting, I'll actually go to this next slide right here. Okay.
Just a question.
Yeah.
So when you disappear,
Yeah.
that disappear, do you need to look for a credit for them to find you? They can't find you?
Basically, as soon as you change your number
Yeah.
and
like that?
change your address, they can send letters, and it's gonna get, obviously the new person that moved into your apartment is gonna say return to sender, she doesn't live here no more. So
Yeah.
they're gonna get the bounce mail. They're gonna call your new phone number, and it's gonna be disconnected. So they will write that on their file. But they, as soon as you apply for new credit again, and it's like, oh, there she is. Now your new phone number is theirs, your new address, and they're gonna start soliciting you again. They
Otherwise,
never-
if you don't do it,
But this is, okay, so how credit used to work was once it was on your credit, reported to your credit, like say you had a bad credit card that went to collections, legally it stays on your credit history for 7 years. Now, new laws, new regulation, once that 7 years is up, they can actually reinstate you again.
What?
This is all just new, it's all coming into play, and they can actually re-register it again after 7 years, okay? So it's, like even with them getting your, because right now, right, since all of the new privacy rules and everything has changed, for me to even send you an email, I need written consent.
Yeah.
Or I need you to hit yes, send me an email button, or there's always now in your email subscribe or unsubscribe, right? And that's from anywhere. Legally, and this is kind of what I've brought to our head at Dominion Lending, because as far as I'm concerned, that should not be allowed because it's privacy, right? It's breaking privacy rules, it's breaking privacy. Everybody's young and dumb at one given point or time in their life. You're gonna, well no, it's true, you're gonna make mistakes, and you're gonna make them when you're young, and then that's when you learn and change and learn from your mistakes, right? And let's hope it happens when you're young, right?
But that was okay before, but when it comes to financial literacy, all of us, we are dumb because there's
Right.
nobody teaching
But-
anything anyway.
But in all fairness now too, because back in the day too, when you actually claimed bankruptcy, like for instance for mortgage rules, etc., we weren't allowed to touch you until that bankruptcy has, like, from the date, and it's not even the date that you claimed it, it was the date that it was discharged out of court.
Yeah.
Okay, so from 5 years from that court date is when we were allowed to give you a mortgage. Now the new rules have changed, it's 2 years.
2 years, yeah.
It's
So that's a
2
good
years.
No,
That's-
it's not a good thing
No.
for the one in a bankruptcy, but it's a good thing for the bank.
Well, no,
for the one
that's
with
not true,
bankruptcy.
that is not true, because, I've actually had a woman, she was from, this is in Winnipeg, she was from Yellowknife, she was actually a professor, she went through a divorce, and it wasn't a good divorce, and his last words to her when he walked out the house was, "I'm gonna finish you off," and he did, financially. She was the one who was evicted out of the house, because she just left because it was violent, whatever. He quit paying mortgage payments, he quit this, he quit that. She's trying to play catch up, raising 2 kids, etc. You know, and this is the whole thing with a mortgage, is that you need to qualify for this financially. So you have 2 incomes qualifying for this mortgage, but she can't keep up on a single income. So things went bad for her. So a blessing for her that after 2 years, we were able to give her a mortgage again, and the interest rate was not crazy. It was not crazy. She had enough money down that she almost bought her way out of that high interest kind of a loan, right? Yeah, go ahead.
Question. So when those kind of situations happen, when a person declares bankruptcy or the credit score goes really, really down, right?
Yeah.
So what does it take for that person to rebuild it? Like
That's all, yeah, we're gonna get to that. I'm gonna show you, yeah, exactly how that is.
so would it be the same thing for a person who declared bankruptcy?
Absolutely.
And
It's
the same thing as the person who just what?
absolutely, because you're starting over.
Okay.
Yeah, it's exactly the same. You're
And
starting.
after those 2 years, they won't see it, or it will
It'll
be-
still be there,
Yeah.
but so much time has passed.
Yeah.
It's
It's no longer the
it's like
7 years.
exact. No, it's 2. It's like, look, you know what? This happened. Life happens.
Mhm.
Yeah.
Like there's people who are millionaires one day, wake up the next morning and they have nothing, right? And us living payday to payday, like you just might lose your job. You have to go back to school to re-educate yourself. You're on unemployment. You're not getting 100% anymore. You're only getting 66.6% of your paycheck. Things happen in life. Maybe somebody's parent passed. Somebody's got to go home. You know, like life happens. But that's why it's a good thing that it's only a 2-year blip where you get to reprove yourself again and say, hey, you know what? I got past this changed, et cetera, right? So like I said, so with the credit score, so does everybody have credit cards here?
Yeah.
No, you don't have credit cards, okay.
Younger ones.
Okay. So I don't want you to go out tomorrow
No, I won't.
and go to Canadian Tire, Walmart, Superstore, and all these other places, okay? Because what happens is this, and I need to stress this. Let's just say that you went to Walmart and Walmart denied you. Then you go to Canadian Tire and you apply and Canadian Tire denied you. So lo and behold, now you go to Home Depot. Home Depot's looking at your report and they're seeing, well, she got 2 denies. Oh, that's high risk. I'm not going to give her one either. And the more denies you get, the worse it is for you, right? Because it actually makes it look worse, even though it's not worse. So what I want you to do is, and right now is the perfect time of the year because it's Christmas and everybody wants to give away money. Canadian Tire is one of the easiest credit cards to get. So as soon as they have their display set up in their store, please go in, fill one out. I can 99.9% guarantee you that you're going to get a credit card as long as you have a job. Okay, then you're good. Okay, have the card for about 6 months, etc. Right? Then try to go into your financial institution. Okay, and say no. Don't start with them.
Thank
No.
you.
Why?
The banks, especially right now,
Because she doesn't have the history.
she has no history. She's got unless you got lots of money in your account, right?
I'm surviving, so.
Okay. But believe it or not, the banks don't. The banks are one of the hardest places to get money, especially on a personal loan because it's not guaranteed.
Okay.
A mortgage is guaranteed because if you default, they can sell that house and get their money back. A car, they can take the car back. With a credit card, if you default on those payments, well, where am I going to get the money? Right? You changed your phone number, you moved. I can't even knock on your door or send somebody there, right? So it's one of the hardest things to get, and the banks they have certain ratios that they have to keep, right? So having the expression one bad apple, you could be that bad apple in the box, right? So Canadian Tire, wait till they get their little thing set up, go in and then try there. Have it for 6 months. Show that you've
you've had a record and you paid on time, then actually apply it at your bank. If then your bank denies you, give me a call, and what we'll do is we'll get you a prepaid credit card. Okay, so you're gonna give me $500, we're gonna get you a credit card. And what they do is they hold that as collateral, and it reports to the bureau full, where the bank ones won't. And if they do, they give you a little bit of a score, but nothing like what these other ones do. So again, it's having a professional looking out for you on that, because you're thinking you're doing good, but really you're not, and they ain't telling you any different. They really aren't. And the majority of the people at the bank, like, they don't even have a grade 12 education, right? Well, no, it's true. They're just not educated, right? You know.
So my question is, what you guys give as those credit cards that are prepaid, they are different from the ones that we can get from the bank.
Yeah, the prepaid ones that you're getting from the bank, it's almost like a gift card.
Because they don't record
Okay,
it.
so there's those, it's like a gift card that you can go in and buy a credit card, use it, and then you throw it in the garbage. There is ones at the bank where, because, and I should explain that. So there's the prepaid gift cards, credit cards, and then there's the prepaid credit card where they're actually gonna hold your money for 6 months to a year until you prove that you are responsible, then they give you that money back, right? So there's two different kinds. But a lot of the banks, even on that one that I'm talking about where they hold your money for 6 months to a year, those ones don't report until they give you your money back. So you've been trying to build a history for 6 months to a year, thinking you're doing it right, and unfortunately you weren't. So get a professional. It's free. It's just like a realtor, right? You know what I mean? You don't know how to sell a house. Get a realtor. That's their job. That's their specialty, right? And again, too, like, they're getting paid commission, right? So they're gonna work hard for you. That's like, you gotta protect yourself. You don't go into a court with a lawyer. Do you know what I mean? You'll get spit up and chewed out real fast. Same thing as this banking industry. Like, you go into the bank and it's almost like you're at the principal's office. Teachers like go to the office, and you're sitting there and you've got your paperwork, and it's like, I get up and I go to work every day and I pay my bills on time, and you're sitting there like this begging for money. No.
Doesn't work.
No. Make people work for you. Like, hey, I'm gonna be paying you this much money, and you're gonna be making how much money off me in interest? What are you gonna offer me? Like, and that's what it is. So I should wait for her for credit score. But I'll kind of go into it, okay? So basically what happens is that you get your credit card every month, okay? And these credit companies report to Equifax and TransUnion quarterly. So it's every 3 months or every 4 months. And what they do is they take that average over the 3 months and they'll apply it, okay? So of course, payment history. Are you making your payments on time? So let's just say that each credit card that you have, just to keep everything simple, is 5 points. Okay, so your payment history. Did you make your payment on time for 3 months? Yeah, you did. Well, good for you. You get 2 points, okay? Type of credit in use. And that's where I'm saying that you want those credit cards for $5,000, because that will give you the full 10%. The 500 little cards, they're little dinky cards, and yeah, it shows that you pay your bills and whatever else, but it doesn't show real credit, real trust, because it's $500. 5,000, okay, like that's a lot. That's a lot of money. You know, 10,000. That's, yeah, okay, wow, she's good with 10,000. You'd be surprised how many people cannot be trusted with $500 and they mess it up, right? Well, it's the truth, right? And it's one of the easiest things to do. $500, like, I know I can go like now and have it spent in 2 minutes one store, right? And I sure look good, or you know. But no, boy, how am I gonna pay that? Okay. Hello. That's kind of what it is. Of course, new credit, and all of you, like for you, you're gonna be new. So we're gonna give you some points for, you know, congratulations. You know, you're into the finance world. We're gonna, you know, monitor that. Types of credit in use, of course, 15%. So say you have a mortgage, it doesn't really report on your beacon, right? But it's gonna give you a history, okay? Automobile, that's actually a really, really good one. If you guys can go lease a vehicle, go buy a vehicle to build credit, I'd suggest a credit card and vehicle. Only if you can afford it. And don't go to like those places that say drive away with car today. If you don't qualify, man, like walk out and stop looking, okay? Because you're paying 29% interest on this car. You'll buy it for $10,000. By the time they're done with you, you're gonna pay $40,000 for it, okay? And this is the other thing that happens. You're gonna go take this $10,000 vehicle, you're gonna go to Cooperators and insure it, and then you're gonna get hit or T-boned the very next day. Well, guess what the car insurance company is gonna pay you? The car's only worth $10,000, here's $10,000. Guess who still has to pay $30,000 to the credit company? You do. You're done. You're paying $600, $800, $400 a month for the next 5 years. Don't do it, okay?
How
Be
many-
smart.
How many credits should one take? Because it sounds to me like to live here you have to get credit, otherwise you won't have a mortgage.
You need 2 trade lines, 2 credit cards, a car and a credit card, maximum, but I'm like, because you can go anywhere and get a credit card. So I'm literally saying do not go over 2, okay? But an automobile is actually gonna give you more because it's a steady payment that has to be paid every month. And it's not like a $500 credit card where you have a $10 minimum payment. You're actually paying $100 or $200 or $400 a month. That's gonna build you credit. That's gonna show that you're responsible and that you can maintain, right? You can maintain that money and maintain the payments. Because with the car, not only are you paying the car payment, but you're also paying the fuel, and you're also paying the insurance, right? There's maintenance, right? So there's other things that come with it. So if you can actually make, like, and when I'm looking at all of that as a financial point, like, I'm not just thinking $400. I'm thinking it's gonna cost you about $700 a month minimum to run that vehicle, or even just to have it, right? So it shows. So that's why they're saying types of credit and use, how much the points are. And of course, the amount that's owed, 30%, okay? Now this is the key. So if you have a card that's worth $5,000, do not go over 50%, meaning pretend in your head that your card's only worth $2,500 and do not go over. As soon as you go over that 50% mark, you're getting shorted of points, okay? Absolutely. If you're making only your minimum payments, you're getting shorted for points. Always pay more, okay? And especially where this is the best advice that I could give you. If you're trying to build credit, go to Canadian Tire, get a Canadian Tire card, okay? You can go get Canadian Tire gas, you can go get oil, you can go get whatever. You can go through the checkout, charge it on your credit card, and walk right over to customer service and pay the bill right there. Or you can actually pay it right there at the checkout. So you can charge it and then pay it. And then it's always at a zero balance. Use it once, twice a month, and then put it away. Forget about it, right? It shows that you use it, it shows that you pay for it, and you're getting full points on everything. You're getting full 30%, full 35% on the payment history. The amount owed, it's at zero balance, you're getting the full points, right? And that's the best way to use it. Best way to build credit. After your credit's established, etc., and you're building habits. Do you know what I mean? I guarantee you'll not go into Canadian Tire again after a year without paying for your card because it's just habitual, right? Okay, so inquiries. This here also affects your score. This is hopefully getting changed. I'm not too sure exactly when, but I've heard it is going to change. So what happens is, when you come to see me for a mortgage, I take an application, I pull your credit history once, I send that report to every lender that I'm dealing with. It's only one pull. When you go to a car lot, they take the application, send it to 10 banks. Every bank pulls your credits. And I've seen people go from like a 700 score to like 600 in one day out car shopping, right? So they don't just pull credit just for the heck of it, right? Because it takes points away. It looks like you're desperate. And as soon as you start looking desperate for credit and pulling it everywhere, that's when you start getting denied. Once, right? We've been through that whole denied thing, right? Then it takes time again to rebuild. So you're just actually going backwards. So just, like I said, go to Canadian Tire, you guys, get a card, and then try your banking institution a couple of months later. If they say no, come see me, I'll get you guys that prepaid card. Okay, so credit solutions and debt solutions, right? So I'm gonna spit this out again. Always pay your bills on time, okay? AppCore, all that kind of stuff, like that'll report to your bureau. Fido, Rogers, your cell phone bill reports to your bureau every single month. Every single one of you guys have a cell phone in this room? Yeah. See what I'm saying? Okay. How do you guys pay your bill? It's only $100 a month, $60 a month, whatever it is kind of a plan you guys have. Do you pay it? Right? As simple as a cell phone. And then you want me to give you $300,000 and you can't even pay a $100 cell phone bill? That's the reality and the thinking of it, okay? Some cell phone, may report late payments, which they do. Try to pay your bills in full by the due date. If you aren't able to do this, pay at least the required minimum amount shown on your monthly credit card statement. Never ever miss a payment, ever, 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 ever. Try to pay your debts as quickly as possible. So let's say most people get paid bi-weekly, right? Try to, within that budget that you guys set for yourself, or if you guys need help setting a budget, please come see me, I can help you. Don't wait till the first of the month and you get paid on the 30th to pay the bills on the 31st. You have 2 paychecks. Why are you struggling? Why are you doing that to yourself? Budget, plan it, so that you're comfortable for the full 30 days and comfortable, okay? Don't ever go over your credit limit on your credit card. They'll keep you going until they feel that you can't go no more, okay? Try to keep your balance well below the limit. We talked about that. The higher your balance, the more impact it has on your credit score. We talked about that. A good rule of thumb is to never exceed 85%. It's 50. Right? It's 50. Reduce the number of credit applications you make. If too many potential lenders ask about your credit, we talked about that. Make sure you have a credit history, right? So we want to start building credit. We need credit history. Okay, so this is from Visa and MasterCard, okay? This is just some examples. So let's say you have a $5,000 limit on a credit card at 18% interest. And assuming that you make no more purchases, so this card's racked, okay? It's full at $5,000. You can only afford to make the minimum monthly payment, okay? It's gonna take you 35 years to pay the card off in full, and they're gonna make $12,000 interest off you up and above the $5,000 that you owe them. 35 years. And this is the problem. We get this credit, and man, I really want these shoes, and hey, you know what, I deserve this dinner, or hey, I gotta buy brakes, or whatever it is. I'm going blind, right? Control yourself. So even at a low rate of 9.9% card, and you're making a minimum payment, credit card will take 17 years to pay it off, and you're going to be paying them over $3,000 in interest. Store credit cards. If you have a $1,000 Canadian Tire card, making your monthly payment, it's going to take you 55.6 years to pay the difference. So even you can kind of see, like, having the 9.9% interest cards are definitely the way to go versus the 19 to 28, right?
I have a question for you.
Yep.
So if you say, you know what, I'm done with this store credit card, I want to finish it, pay it, I'm done with it, do you get affected or you don't?
Do not ever call in to cancel a card.
Oh, yeah.
Never do that.
Never.
Never,
Why?
ever.
Why?
Because it shows that you can't trust
You can't
yourself.
trust yourself. Because there is a reason why.
Yeah, there's a reason why. There's a
You-
reason why.
Pay
So
it
if
in
it-
full, keep it.
So,
Okay.
and then what'll happen is if, so say you put
Cut
it
it out.
in the, well,
Cut
no,
it out,
don't do
so-
that either. Because even if you put it into the drawer, in 6 months, they're gonna close it.
Yeah.
And then it's gonna, all I'm gonna see is that it's closed by credit grantor. It doesn't say why.
Oh,
So-
Closed by credit grantor could be that, you know what, it was like, we're done with you and your high max things. Either you pay today or I'm gonna report it to the credit bureau. So you call your mom and dad, they pay it. It says closed by credit
Closed by
grantor.
credit card.
And then you're like, you know what, I just don't ever use this
so wait,
card.
if you don't
I just wanna get rid of it. It's gonna say closed by credit grantor.
Wow.
2 different circumstances, same response.
Yeah.
And I, as a financial expert, have to think the worst. Like, I know you're really nice, but you want
Yeah.
$300,000.
But nobody knows your story.
Can I ask,
That's
so
right.
you mean in 6 months if I don't use it, that's when it goes to that, or I didn't get it?
No. Basically, what they're doing now, like, if you have a card that's just not in use,
Mhm.
because they're not making any money off you, and it's just null and void, they just kind of want it off their plate.
Yeah.
Do you know what I
They're
mean?
not meant.
So it's not necessarily 6 months, some places are a year, some places are 2 years, but as a rule of thumb, use it once every 6 months.
At least
Again,
they will warn you. They will send you a letter. They will call you. Some of them, they will call you. If you don't respond,
actually, and they won't even necessarily do that. And this is my mom went to go get appliances, and she has a Sears card, and you get all these Sears points, whatever. She hadn't used the thing for I don't know how long. She goes to Sears to swipe the card. It's like denied, denied. So then she's on the phone because now she's really freaking out. Like, what the heck's going on? I haven't used this card because she hasn't used it. They didn't even call or anything. Sears, and what happened was is that Sears, let's just say it was a Visa. Well, they switched to MasterCard. So when they switched, because it was a stagnant card, they just let it go. MasterCard didn't want the liability or whatever. And it was like a card for, I think, 20,000 or something. So they're like, forget it. So like there was no notice and whatever. Like you're just gonna kind of sometimes get slipped through the cracks sometimes. So don't depend on them to call you and notify you. Like know when your bills are to be paid. It's the same thing. You get a card and maybe you didn't get the thing in the mail. You know you have to make a monthly payment, right? So why make the excuse, right? I don't want to hear your excuses, right? Everybody knows monthly payment. Debt consolidation. Okay, so debt consolidation can be great because we live in a finance world. So we can go buy furniture, computers, cell phones. You can basically almost lease and finance anything except for food, right? But everywhere you go, it's true, right? Like they got layaway, they got this, they got that. Like you can finance pretty well anything. So what happens is, and of course, like that's what I was saying earlier about touching and feeling money again, right? Get back to money. Get rid of your plastic. You go and buy a car and it's like, you know what, I'll just sign up and get a car. Now you got a car payment. Oh, now you got a cell phone bill. You go do this. Now your bills are adding up. At the end of the day, you've just got too much. And you're shuffling and you're borrowing from Peter to pay Paul, etc. So you're like, wouldn't it be easier if I could just borrow $20,000, pay my car off for $6,000, pay off my credit cards at this amount, and just have one monthly payment? Wouldn't that be great? Mm-hmm. Awesome, okay? And debt consolidation is great. The problem with debt consolidation is you've got yourself into that habit, basically, of buying and leasing and financing anything that you possibly want, and it's only $40 a month. It's only $60. You can go get brand new leather furniture right now for $20 a week, or a 50-inch flat screen TV for $15. Again, $15 adds up, $30 adds up. You get yourself into a pickle and a habit. So when you consolidate, you think that habit's going to stop. It's not. So we're going to consolidate. You pay off that 20, and we've lowered your monthly payment. We've lowered your credit. So you're just going to go get more. By the time you're done, and I see this over and over and over again, and this is one thing where I tell, depending on the circumstances of the person coming to me for a debt consolidation, I turn away more business because I know habit, I know bad spending, I get 6 months financials. I know right then and there if you've had something bad or tragic happen to you, or if you're just totally irresponsible. I know. The irresponsible ones, it's like, go see somebody else who's going to take advantage of you. Me, I'm like, no, this is what you need to do, right? Et cetera, et cetera. So really watch. Money is, it can honestly make you sick. It can make you gray. It can make you depressed. Like it totally affects your health physically, mentally, make you wrinkly. Like it does. Like, you know, you go to sleep at night and you're like, oh my God, how am I going to pay these bills? And she's got daycare payments tomorrow, and how am I going to do that? And you know, it's very stressful. And then you have a partner and a loved one. And even though you guys are both working hard, like it takes a toll on the relationship, right? You're not yourself, right? So really watch with debt and stress. It's not good.
I have a question on debt consolidation, because there's so many companies out there that are debt consolidators.
Oh, well, like I said, you know how much money I could make off of people by doing that? So and this is the thing with debt consolidation. So right now you're paying, and this is honestly what it is. So you have a car payment, let's say 7%. All your credit cards are 18, 19%. And let's say by the time I take everything, you're paying $1,500 a month. I'm going to consolidate that at 10% interest or 15% interest. As long as that monthly payment is lower, are you going to sign?
Yeah.
Right? I'm making 15, 20% interest off you.
Exactly.
And I look like a hero because you're saving $200 a month. No, because you know what? You're going to default on that. You will, right? You will.
Actually, it bumps from 8% more to pay your credit.
That's right. Yeah, your card. Yeah, that's exactly it. Your card just went from 7 to 15%.
And on another note, most people have that thing of consumer proposal. there's so many companies out there talking about helping you pay
That's
off
right.
your debt.
That's right.
Because I mean, I'm a realtor, right?
Yeah.
So I see a lot of Africans, a lot of clients coming in, and they just see an ad on TV to consolidate your debt. They go in and sign
Yeah.
for $3,000-4,000, and then
A
your
fee.
credit is red. Yeah.
Yeah. Yeah.
You know,
You can't even
And-
pay a $5,000 credit card, but you can pay the fee to the
the
person.
fees. So basically,
That's
a
right.
consumer proposal is under the Bankruptcy Act. So you start for 5 years. And these guys, some of these guys that come to me, their paycheck, their monthly paycheck, they make about $3,000, $4,000, $5,000 a month.
Yeah.
And someone got them into signing that, right? So then you start for 7 years.
Yeah.
You buy
But
a
that's
home.
the whole thing, like there's so many
Financially.
salespeople out there, right? That they make it sound great and they make it sound grand, and you don't know any better, you're not educated, none of us are. Like, none of us, consumer proposal, it's not even necessarily, I don't go there, I'll consolidate with equity in a mortgage if there's no bad history there, right? Cause I know, you just know. But that doesn't mean that the next two people beside me aren't gonna do it. And because you're so stressed out, and because of this and because of that, you're gonna sign just to make it go away. But it's a short fix. It's like a Band-Aid on a cut, you know what I mean? Like you need stitches, you gotta sew that thing up, right? And you gotta seal it properly. So really do your homework. And I don't care who you're dealing with. No matter who it is, a car salesman, a mortgage broker, a realtor, like do your homework. I've seen an acreage with a bad well. And before the well's getting tested, the realtor dumping Javex, like bleach into the well.
Clean the
So
water,
yeah,
clean the water.
so when they, you know what I mean? Like
Yeah.
you don't know. My family's at the rodeo. I'm at my presentation still, because they won't stop, right? You know how it goes. Okay, so basically that's that. Personal loans, again, they do offer an alternative to using a credit card for major purchases. They build credit, et cetera, et cetera. They typically have a lower interest rate and are a fixed term, right? So say like you can go get a personal loan to buy a vehicle, things like that. Most definitely check out the interest rates, do shopping.
Which is the best?
Pardon?
Which one is the best, like, in your own
For a
perspective?
personal loan,
Yeah,
this
like
is where you could go
the
to your bank.
percentage- The percentage they should
Oh, a person, that all depends on every
Depends on
person. There's lines of credit, there's, you know, like, it's kind of a set, like, anybody going in for a personal loan to buy a car, it's usually 4 to 9%, depending on your credit history, et cetera, et cetera. Same thing as a line of credit, 4 to 9% is basically what the bank's gonna give you, depending on the client history, et cetera, et cetera. Like, the more you do build a relationship with a finance person, and you borrow and pay back and borrow and pay back, they are more lenient on giving you better rates because you're a good client, right? Like, yeah.
Yeah, there is another blind spot, overdraft. Many people tend to think because you have a checking account you can have overdraft. It's easy, it's a dangerous thing to play around with.
It is.
Overdraft.
what do you go
Okay, so like basically,
Yeah, you're right.
like, okay, for me, I'm never at the bank on time, and I'm a finance person, right? I have one bank account that I strictly use, and that's at RBC for all of my debits. So my mortgage payment comes out of there, my car payment comes out of there, everything comes out of there, okay? I deal at a credit union. I won't deal with the top 5 banks for money, et cetera. I'm all about the credit unions, okay? So every and I don't believe in wire transferring because I'm a little bit of a hypocrite, where I don't trust the internet and I don't trust people that can, you know.
Sure.
I'm paranoid. So I'm the kind of person that always has to go into the bank and pay for this stuff. So I think my highest bill, and I went into the bank and I applied for an overdraft of that amount, and that is it. That's because it's like, oh my goodness, what's the date today? It's the 13th. Darn, like my car payment was yesterday. So it's good that way because it saves you a bounce, right? A bounce check, right? Do you know what I mean? And that is safe and good and protective. But you have to, again, it's like credit. You gotta have your limits, right? And that's where he's saying, because if you've got $10,000, say, in your bank account, and you go in to apply for a line of credit, well, how's the bank gonna make any money off you? You're never gonna be in the red, right? But if they give you all of that credit, and then we're impulsive shoppers. People are, they see it, they touch it, they want it like now. And it's like, okay, you know what? I got a line of credit, right? So I'm gonna pay cash for that card, take the 10 and I'm in the whole 10, right? But the thing,
percentage is
you're,
high too.
oh, it's crazy, it's crazy
Percentage is
interest.
very high.
It's very high, higher than a personal loan and higher than that, so that's where they're gonna get you. The bank's making billions every quarter, right? Like you walk into the bank and like, do you not get asked to buy something? Or do you want something every time you go in there? I guarantee you 1 out of 3 times that you're getting harassed to get something, or getting phoned for insurance or something. They want your money.
Yeah,
But-
you mentioned two, at least 2 credit card or an account or something.
Yeah.
But NSF is another thing. Every time you have a two.
But this is it. No
Yeah.
matter what happens here, like with credit, like even for the mortgage, I need something to compare to. So if you do not have, and this is only valid for you for 3 years here in Canada, but if you go through the CMHC guide, let's say you only have 1 credit card, I can actually get a 12-month history written by your landlord saying that, yeah, she pays her stuff on time. Now to prove that, I'm gonna pull 12 months banking history showing that you actually do pay him on the 1st of every month. So I'm gonna make sure he's not lying for you. Do you know what I mean? So I can use that as a trade line. But as a Canadian, if I went into my bank, being born and raised here and saying, yeah, can I use my rent? I guarantee, like CMHC might allow it, 90% of the lenders will not, right? Because it's like seriously, you're how old, right? You know, how do you not have credit? You're Canadian, right? You know what I mean? So then I'm thinking you're hiding a bankruptcy, or you're this, or you're that, right? It's a conspiracy. Like I'm a conspiracy theorist. I'm looking at your credit history and I'm like analyzing it all, right? Like, and you have to, and every financial institution is doing that. And depending on who, like for me, I see bad things, so I'm like, oh, how am I gonna work around that to make sure that I get you a good interest rate? On the bank's point of view, it's like, yeah, sorry, you know, yeah, we're gonna have to get you at 4.99 there, right? So it's give or take. Okay, so what and when a mortgage? So a mortgage is just a fancy legal term for a loan secured by real estate. As we were saying earlier, you're basically borrowing against a piece of property that has a value to it already, right? It's a real estate. Refinancing your current mortgage and or other debts, because you can use your mortgage basically to do that. As you're paying down your mortgage, there is equity, which is what we call it in your home, that you could actually pull out and pay off other debts, consolidations. And of course, every 5 years, your mortgage is up for renewal, because you're usually signing for a 5-year, right? They range from 1 to 10, but that's kind of what it is. And of course, for the people here that do have a mortgage, why get a mortgage review? Well, what if I could save you tens of thousands of dollars and pay your home off faster, right? So in 2009, 2010, 2011, 2012 is kind of when they started going down. So say you got your mortgage in 2011, 2012, interest rates were higher then, a lot higher, right? Now they're low. So even if you had to pay a penalty, say maybe $3,000, and I did the difference of the math over this, say 3 years, and I could save you 30. If I said, give me 3,000 and I'll save you 30, are you gonna do that? Of course you would, right? You know what I mean? The other thing too is that in those times, people were actually signing mortgages for 30, 35-year terms, right? So that's been capped. 25 through CMHC is the max mortgage term that you could do. If you do put more money down and bypass CMHC, we still can't take you to the 30, right? But again, like what if I could save you 10 years off your mortgage and keep your mortgage payment the same? Do you know what I mean? So always just check, and it's free. Use the service. You don't use me, call another broker, call somebody you know. He's a realtor, I guarantee he's got 101 brokers in his pocket that he can even refer you. Do you know what I mean? Make sure you guys know who you're talking to, check it out. It's your money, don't give it away. Okay, so this is basically about the mortgage broker, but I'm pretty sure you guys all know what I do now. So I'm not gonna get too much basically into that, right? I find you the best rate, the best terms, best conditions. Not every mortgage is the same. Like you, this gentleman here, he wants to pay his mortgage off fast. So I'm gonna make sure that I find him a mortgage with a 20% prepayment as opposed to somebody who's gonna get 15%, right? So even though the interest rate is the same at say 2.5%, because I'm allowing him an extra 5% a month or 5% a year, he's gonna be more happy with that. So I'm gonna make sure that that's what he gets. There's so much fine line details in the mortgage contract, it's not just the rate.
Okay, I have a question.
Yeah.
So let's say he start his mortgage with 15% prepayment
Yeah.
allowed. Down the road, can he get somebody to change that into the 20% prepayment or
Yes,
whatever?
but it would
is
have to
that's
be a
not
whole
good?
new financial institution, et cetera, but yes, absolutely you can. But again, too, you have to do your homework. Like with a brokerage, you know, and you're going through a lending company, the max you'll pay to break your mortgage, meaning an interest differential penalty, but I'm gonna call it break your mortgage, is 3 months interest, okay? In a bank, what they do is right now, like the banking, the benchmark is 4.64%. Now for them to compete with mortgage brokers like us, they discount that rate down to what we're offering clients, okay? So let's just say 3%, because we'll keep the numbers easy. So they're gonna discount that rate down to 3. Well, that leaves 1.64% on the table. Well, if you break your mortgage, so meaning you move, or you refinance, or say you have to, you have to sell because of whatever, you broke your legs, who knows what happens. If you break that contract in any way, shape, or form, what they do is they take that 1.64% and you have to pay that back, right? And that's all right there in your contract. There's people out there that pay I've seen it as high as $18,000, right? So if you're somebody in the military, you definitely do not want a mortgage like that, because you could be transferred at any given time, right? Depending on your career. Always keep yourself open, because that's your money. You're working hard for it. Like, and then there's people that say you just bought your home. Well, there's not even enough equity in the home to pay out that contract to the bank. So now you're on the cuff to pay the rest. Like there's nothing there. So like there's a lot of fine line detail in the mortgage. Make sure you guys do your homework. Ask 101 questions to your mortgage broker, and your mortgage broker or any lender at that time. Like I'm pushing mortgage brokers. Don't go to a bank for a mortgage. Honestly, don't. They're not out there for your best interest. They're there for themselves, and that is the truth.
Yes, most people don't know that.
No, they don't. No, they don't. Like I paid $9,000 penalty the last mortgage that I had, and that's when I started realizing about mortgage brokering and insurance brokering, because I was flipping houses. I was a stay-at-home mom, bored. I started ripping up the house, and then we sell it, and we made money, but I also had to pay penalties, right? And I was like, how do I bypass all this? And you start talking to people, and somebody came onto a mortgage broker. So then I'm thinking, okay, well, if I'm going to be flipping properties all the time, then I should either become a realtor or the money ends, right? But because I have kids, this gives me more freedom, as opposed to, like, you work a lot of weekends, I bet, right? Right? Yeah. 'Cause that's when people are working all week, right? So that's kind of how I got into this business. And I stress, like, I don't do unto others that I wouldn't want done to me. And I try to teach and educate so many people. Like, I honestly believe what goes around comes around. So even if I don't get a client out of anybody in this room, I'll get them somewhere, you know what I mean? Like, and it's good practice, right?
How long have you been doing that?
I've been an insurance broker for 4 years, mortgage broker for 3. Yeah. And I'm just now getting into commercial lending now too, so for businesses, etc. So yeah, I like it.
You're getting a car.
Yeah, for sure. Yeah. Well, that's a totally different ball game. Okay, so CMHC, I gave you guys that CMHC list in there for what you guys basically need to qualify for. It basically says it all right there, depending on your status. If you guys are a non-resident, resident, working visa, etc., it'll basically state right all there what's there. So that's kind of what this is all is. And if you guys have any questions about that form and it doesn't make any sense, just let me know. But all the borrower qualifications are on there. Just an example of beacons. Sometimes your international credit score, we don't really look at it and use it, but we'll bring it into play and saying, like, look, you know what I mean? In his country, like, he was good, right? Like, give the guy a break. He just needs a break, right? Some companies will actually do that. Different types of mortgages, variable, fixed, prepayments, we had talked about that. And that's really about it. Everything's in those guidelines.
I have a question.
Yeah.
Can you speak a little bit on payday loans?
Payday loans?
Yeah.
Oh
Cash,
my-
yeah.
Okay,
I have a friend who's
I want,
addicted.
does everybody have that
That's-
receiver where you
that's
can
not
stop the
Pay-
TV?
Payday.
Yeah,
Payday
payday,
loans.
or yeah,
It's
okay.
actually illegal now, isn't it?
Oh no, money market's right there on the
It's not
corner.
illegal. It's not illegal. There's no
Well, what is that first?
Okay, everybody
That's
on the fine
that's
print, when that ad comes up on the TV, does anybody have that thing where you can stop it?
Yes.
Okay, it's like 100 or 400% interest on your
So
money.
She doesn't know what is the payday
But
loan.
I
They
know.
No,
can't
I
see
know.
that
I
from the
have
bottom.
a friend who's addicted to that, and he's been denied other regular credits and stuff like that. So I know it's bad, and I
Yeah.
know like if he gets 750, and he has to pay in 2 weeks, he has to pay 150.